Okay, let's unpack this. We have a massive stack of source material today, and it really paints a picture of a nation operating at uh, two very different
It's a
speeds.
fascinating duality, isn't it?
It is. On one hand, you see these soaring global successes. We're talking huge diplomatic wins, billions secured, and a historic, almost impossible legal victory.
And on the other hand,
On the other, a quiet but a really profound crisis brewing right at home, right in the very institutions that are supposed to ensure our future competitiveness.
and that's really the mission for you listening to this deep dive, it's about connecting those dots, the high-stakes diplomacy, the landmark legal case, and, the domestic policy
To
paralysis.
see the bigger picture.
Exactly, to understand the core priorities and, maybe more importantly, the vulnerabilities the nation is facing right now.
Mm.
And our sources, they demand we start with the biggest figures. The scope of this recent diplomatic success is just staggering.
It really is. We're talking about the outcome of the president's state visit to the UAE, which wrapped up around November 17th and 18th. This was framed as a major diplomatic scorecard.
And the investment numbers,
Yeah.
they certainly bear that out.
So what are we looking at?
The confirmed practical results that were secured during that summit, they totaled $35 billion.
$35 billion.
But what's vital here is the target of that capital. This wasn't just broad investment. It was laser focused.
On future tech.
Absolutely. We're looking at $20 billion specifically earmarked for artificial intelligence and another $15 billion targeted directly at the defense industry. That's a huge strategic commitment from the UAE.
And it wasn't just the hard industry, which is something that I think often gets overlooked in these big deals. There was also this planned expansion of K-culture investment.
Right, the K-pop, K-food, all of it. That cultural dimension is highly valuable. It's often less volatile than, say, direct industrial investment.
So what are the numbers on that side?
Well, currently, the market value of K-culture in the UAE is around $44.1 billion. The agreement sets a target to expand that to $70.4 billion by 2030.
Okay, so that's a projected expansion of, what, about $26.3 billion?
An additional $26.3 billion draw, yes. So when you put it all together, the $35 billion in AI and defense, plus that culture expansion, we see a total investment that reaches $61.3 billion. It really redefines the relationship.
That is a colossal number. But, the true value of these summits isn't always just the dollar sign, it's the strategic depth.
Right.
What else was locked in beyond just cash transfers?
This is where you see the shift. It's a move away from a simple buyer-seller relationship to a true joint venture partner.
Especially with new technologies.
Exactly. 7 memorandums of understanding were signed across advanced industries,
What?
AI, space, biohealth, intellectual property, you name it.
It's interesting, though, that defense was initially excluded from those formal MOUs. What does that signal?
Well, it suggests a certain level of sensitivity and complexity, but it definitely wasn't ignored. It was immediately agreed upon for future dedicated negotiations.
Setting it apart.
Right. It signals a commitment to elevate the relationship into what the sources are calling a new starting point for 100-year relations. This is about deep, long-term geopolitical alignment.
Let's dig into the energy sector for a second, because that seems to show the most profound shift towards joint future markets.
It really does. In energy, the cooperation is pivoting heavily towards next-generation nuclear technology, specifically small modular reactors, or SMRs.
And the goal isn't just development.
No, it's about establishing a joint strategy to enter third-country markets together. SMRs are these smaller, faster-to-deploy nuclear facilities. Many developing countries see them as a vital low-carbon energy source
So they're essentially creating a global nuclear export partnership.
for a high-demand future technology, yes.
And on the output side, for that massive AI investment, where are we going to see that $20 billion materialize practically?
The immediate focus is regional expansion. The collaboration includes setting up AI data centers and service hubs in the UAE.
So not just serving the local market.
No, these are explicitly aimed at providing joint technical services targeting the Middle East, Africa, and Europe. This positions the partnership as a major technological gateway to 3 continents.
And what about space?
A similar story. They are moving to a joint participation phase. That covers everything from joint satellite development to building shared ground infrastructure. It's a truly integrated strategic alliance.
That is a remarkable haul. Okay, now let's pivot from high-level diplomacy to an equally significant but utterly different kind of victory. the conclusion of a 2-decade-long legal saga.
This is where it gets really interesting.
We are talking about the long-running investor-state dispute, the ISDS battle, with the private equity fund Lone Star over the sale of Korea Exchange Bank.
And this win is just monumental. On November 18th, the government announced victory in its annulment application with ICSID, that's the International Center for Settlement of Investment Disputes,
Which officially concludes the dispute.
in the government's favor after years and years of litigation.
And the financial consequences, I mean, they're huge, aren't they? The government had been ordered to pay hundreds of millions before this.
They were. Correct. This victory completely nullified that obligation to pay the principal and interest from the August 2022 ruling.
And that liability was?
It was about 400 billion won.
Yeah.
So roughly $216.5 million, plus all the accumulated interest. That massive financial cloud, it's just gone.
And they got legal costs back, too.
They did. The government secured the return of 7.3 billion won in legal costs from Lone Star. It's a complete reversal.
Just to remind everyone listening, can you quickly recap the scale of the original claim? Why was it filed in the first place?
Sure. I mean, the history goes back 2 decades. Lone Star acquired KEB in 2003. They later claimed that government intervention stopped them from selling to HSBC for a much higher price.
That was the 5.9 trillion won deal.
Exactly. They claimed that was blocked, and they ended up selling for less to Hana Financial in 2012. So they filed the ISDS claim that year, seeking a staggering $4.6795 billion.
To fight a claim that big, lose, and then overturn it completely, I mean, you have to talk about how exceptionally rare this annulment outcome is.
This is the real crux of the victory. Annulment proceedings at ICSID are. They're like a Hail Mary. They almost never succeed.
What does the data say?
Well, ICSID data shows that since 1972, only 25 out of 503 rulings have even had a cancellation application accepted. And of those, only 8 resulted in a full cancellation.
8 out of more than 500.
We're talking about a success rate of just 1.6%.
That is a brutal statistic, a 1.6% chance. So what was the winning factor? How did they pull off this statistical miracle?
The legal sources are pretty clear on this. The winning argument centered on proving a serious violation of procedural rules during the original arbitration.
So not arguing the facts of the case again, but the process itself.
Precisely. In these high-stakes cases, procedural violations are a big deal. The government successfully showed a flaw so egregious, likely related to the tribunal's jurisdiction or how evidence was handled, that the annulment committee had no choice but to set the entire ruling aside.
So it's a fundamental defense of the nation's right to exercise financial supervisory sovereignty.
It is. It secures the government's legal standing in future disputes and, crucially, protects national funds. It sends a powerful signal to global investors.
Okay, so we've covered these massive external successes, the $61 billion diplomatic haul, the 1.6% chance legal win. Now we have to turn inward to the domestic side.
Because there's a serious policy risk at play here.
Right. While the government is securing all this AI investment abroad, the domestic R&D sector is facing a profound threat, a systemic leadership vacuum. This is where it all connects.
It's a stark contrast. The problem is a chronic issue of these prolonged leadership vacuums in key public research institutions. Successors just aren't being appointed in a timely manner.
Let's look at the Institute for Basic Science, IBS. That's a cornerstone of our scientific research. The issue there seems particularly bad.
It is. The former director's term expired last November. He stayed on for nearly a full year, but now that's over. And the shocking part is that even now, there is no successor selection process underway.
So the position is just indefinitely vacant.
Indefinitely vacant. And this isn't an isolated incident. KAIST, our top science and technology university, and numerous other public science research institutions are facing the same paralysis.
And the timing on this is especially concerning, isn't it? Because the resources are actually there.
That's the irony. The government has budgeted the largest ever R&D expenditure for next year, around 35 trillion won. It's a huge foundational investment.
But the control towers are empty.
That's how the scientific community sees it. A recurring failure, a political habit where these crucial appointments get stalled or influenced by political maneuvering.
So let me challenge that for a second. If the money is there, why does a leadership vacuum matter so much? Won't the scientists just keep working?
It matters because of strategic direction. You can't execute a long-term strategy, like how to best use that $20 billion in AI investment, without stable management.
Projects lose momentum.
Exactly. Large-scale projects stall, international cooperation gets put on hold, and top scientific talent.
Right.
They're attracted by stable, visionary leadership. Political paralysis creates uncertainty, and that makes it harder to keep the best minds, even with a record budget.
So the very foundation needed to leverage these diplomatic wins is eroding.
It's a profound internal risk.
Okay, let's wrap this up by looking at how all this interacts with the global markets. Because the sources point to a sharp downturn recently, a kind of sell everything moment.
The panic hit hard around November 18th. The KOSPI index dropped 3.32%. It fell below that critical 4,000 mark for the first time in 7 trading days.
Driven by what?
Massive net selling from foreign institutions. It was a major flight from risk.
And it wasn't just stocks, right? This felt like a deeper systemic nervousness.
That's the definition of a broad risk-off event. We saw Bitcoin collapse below the $90,000 mark. Gold, which is usually a safe haven, saw its price drop over 7% in just 3 trading days.
Even the currency market.
Yep. The $1 exchange rate closed higher for the week at 1465.3, which indicates capital moving out.
What are the core fears fueling this downturn?
2 key external concerns, really. First, the possibility of delayed U.S. interest rate cuts. Investors are bracing for a longer period of high borrowing costs.
And the second?
This is highly relevant to our discussion. It's the growing fear that the current surge in AI-related stocks, the very sector where the nation just secured $20 billion in foreign investment, may have peaked.
Wow. That second point creates extraordinary tension, doesn't it? Securing a multi-billion-dollar commitment to AI just as global markets start panicking that the AI bubble is running out of steam.
It certainly raises the risk profile. If that fear of an AI stock peak turns into a sustained bear market, the profitability of those joint ventures could come under immediate pressure. The diplomatic success has bought future capability, but the market volatility underscores the high execution risk.
So that brings us to this complex synthesis. On one hand, you have strategic success on the world stage, billions in AI and defense, and that historic near-impossible legal victory with Lone Star.
But on the other hand, the foundational research institutions, the very places meant to execute on that technological vision, they're suffering from political paralysis.
And the financial environment reflects this duality. You have these high-stakes legal wins alongside severe market volatility driven by global fears about interest rates and an AI peak.
And these conflicting dynamics, they directly influence the investment opportunities, future competitiveness, and the economic landscape you have to navigate every day.
Which leaves us with a really critical question.
It does. It's something for you to mull over. The diplomatic mission secured tens of billions in foreign AI investment, which is an incredible feat. But if foundational institutions like IBS and KAIST lack stable, decisive leadership because of chronic political delay, can the nation genuinely sustain the technological edge needed to maximize those new high-risk partnerships? What is the ultimate long-term cost when short-term politics stalls essential scientific stewardship?